Hi, this is Chuck Oliver. Welcome to this week's Hidden Wealth Solution Review. Well, let me teach you how to steer clear of the Biden extra $2,600 tax. You say, Chuck, what's the $2,600 tax? Well, right now it's found that the average person or family is spending an additional $175 per month. That translates into an extra $2,100 per year. Remember, that's spendable, which means if you're having to take money or earn money or take money out of your IRAs, you actually have to take out, if you're in a 20% bracket, $2,600 to have the extra $2,100 to spend, or translating in the extra $175 per month. Folks, that's just inflation tax. They want higher income tax, investment tax, inheritance tax, corporate tax, capital gain tax, and it's just getting started. Let me teach you this coming Tuesday by going to retirementprotected.com. That's retirementprotected.com. And let me teach you a couple concepts we taught clients just like yourselves from all over this country just this week. And I'm going to give you two examples. If you're sitting on predominantly sizable amounts of IRA money, 401k, 457, any type of tax-deferred account, you are the government's tax target. And you will have the highest inflation because you're having to take out so much to net how much higher the cost of things continue to rise, right? To be able to afford. And they're just getting their spending started, folks. They're trying to ram through another $3 to $4 trillion as we speak. Well, here's the opportunity. These clients took the time to learn one strategy from concepts I'll be teaching this Tuesday at retirementprotected.com. To go into the detail, it's individualized. That's why traditional planning doesn't work. It's not a one-size-fits-all. And there's not enough time in one webinar setting to teach you all the particulars and the specifics as it relates to these concepts. But we do provide that as an opportunity for people that want to get tax savings planning still done in time to get it done still in 2021. But it starts with the concepts. And here's what a couple of these clients learned. They learned one strategy that between both of these couples, we were able to help them convert $1 million of their IRAs to Roth, and they used the deduction, one strategy, one concept to use the deduction to cover the tax, so they paid zero Roth conversion tax. Well, what did that do, Chuck? Well, it enabled them to have a lesser balance in their regular traditional IRAs, and one of those two couples is facing an RMD starting next year. Well, one of the other strategies, and I'll teach you the concept called an IMQ, was where he still, even if you're retired, so listen up, if you got a 401k or a 457, and even if you've retired, but you've kept the plan in place, or you haven't retired and you're over 59 and a half, this client, now almost 72, was able to transfer his 457 to his wife, who's 10 years younger, and now he doesn't have an RMD, and she won't have any RMDs against that account for now almost 12 years. Now they have time to use the first strategy, to use the deduction to offset the remainder of that tax-deferred money. Translation, insulating their serious income from the IRS, protecting the inheritance going to Uncle Sam, as opposed to obviously they wanting to have that go to their children, and avoiding this inflation. Because when we can get rid of the extra taxation, you can get through higher inflation periods of time. And I want to teach you how you can avoid both. Go to retirementprotected.com. That's retirementprotected.com. And look, I know the Social Security Administration talks about the biggest increase from what it's rumored to be since 1982, an extra average $92 a month with the 5.9% Social Security increase. Folks, that's all inflation driven. So yeah, you're getting an extra $92, but the government's making you pay an extra $175 to live. It's all smoke and mirrors. And here's the difference. The Social Security is taxable. Folks, let me teach you how to create tax-free income sources and get your money untaxed, keep it untaxed, and transfer it without tax, and do it with less risk and less cost. Go to retirementprotected.com. That's retirementprotected.com. And if you're serious, you've been a strong saver in tax-deferred, or you're a high-income earner, these are the scenarios of the clients that we can help the most, and you have the most to lose by getting out of 2021. The time to get it done is before the end of 2021. Folks, you work hard for your money. Protect yourself. Retirementprotected.com, retirementprotected.com.